Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. We've been bringing you advanced technical analysis, market commentary, trade ideas, and mechanical trading algorithms like you see here, and dozens more since 2003, over 20 years for individual traders and professional institutions. Okay, before we get into the midweek update, we made a major update to our KISS systems. I suggest you check it out. Go to systems area. Again, the website is breakpointtrades.com with two T's. The link is in the description. Go to systems. Go to KISS STS tables. That brings you to our proprietary KISS systems that no one else has, only Breakpoint. And besides cleaning up the styling here, what we did is we added a favorites column here that you can click a star next to each of the stocks. It'll save it for you. And then there's a favorites box up here where you can see your collection of them. And whenever there's a change, we're also going to add the ability of the website to automatically email subscribers. You know, for example, if one of the stocks you're following, the smart trailing stops hit, or if there's a new long, stuff like that. Very useful resource. Now, one caveat, if you're not a subscriber to Breakpoint Trades, it's not going to allow you to set favorites. You have to be a subscriber, okay? But really cool. And, today you can see AMD hit its smart trailing stop. It had originally went long on May 5th. And, some of the other major big cap stocks that have just been leading the market this year, like Apple, Microsoft, Tesla, none of these have hit their smart trailing stops yet. Microsoft's getting a little close there, but still some room on these. We'll see if this pullback ends up hitting these smart trailing stops or not. Okay. Anyway, let's go ahead and get back to this newsletter. This is a state of the market midweek update for June 21st, 2023. I'm going to go ahead and start the back end recording for our subscribers here. Hello, everyone. This is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, June 21st newsletter. Tonight's newsletter, as you can see, divided into four major sections. Same general theme as we always keep. And by the way, I did add some trade ideas here. And as far as the market, as you know, nice pullback this week. If you listened to my extensive weekend newsletter or watched my YouTube video, you know that I was favoring a pullback this week. Some sort of reversion to mean, at least back to the respective 9-day exponential moving averages on the S&P and Qs. And we've gotten that, okay? Again, it didn't take rocket science to figure that out. We were very stretched last week up near some resistance trend lines of channels, etc. Very overbought. So logical mean reversion we're, having. Now, will it turn into more? We'll see. We're still, for now, favoring as some sort of fourth wave, but we'll see. Liquidity, which we've been talking about, which drives this market, has been negative this week, and that's what drives the market. It's supposed to potentially go back positive on Friday, I think. So I'm still looking for a little more down action. Maybe tomorrow, if we get a little upside moving in the morning, I think that could be sold. But again, we'll react to whatever happens. And of course, the KISS systems, will react to whatever happens as well. By the way, this image you see here, I created this, since AI's been all the craze. I created this through an AI program image generator called Midstream. This was my description. Fed Chairman Powell getting hard questions from members of the Congress over the economy in ultra-realistic 8K with watercolor background. And, it's pretty cool how it made that. I don't have to pay a designer or anything else. So, but anyway, an example of that. Let's move on. Item number 2 shows the index sector table, what transpired today and this week. So you can see index is down anywhere from 1 to 1.5% for the week. Nice pullback today. In fact, most of the losses for the NASDAQ occurred today. Okay, and Dow and Russell are down the least so far. As far as the major market sectors here, today was a mixed bag, kind of 50-50 up and down. Weakness obviously concentrated in that technology sector primarily. Solid losses for the week here for the indexes for the sectors. Only 2 sectors out of 21 here are up: home builders and metals and mining. Currency wise, US dollar down 0.5% today, had a nice pullback. Cryptocurrencies came rallying back strongly yesterday, followed through today. So nice moves there. Nice moves on a lot of the crypto stock trade ideas that we've given, such as Mara, Bito, etc. BITI. Commodities, almost all of the upside here. Crude oil up almost 2%, natural gas up 4.2, agriculture, corn, wheat, all these up very strongly. Not something the Fed likes to see. And now, despite the dollar pulling back, the precious metals still remain weak. Take a look at this. Gold, silver down 2%. GDX, the miners, down a tad, down 4.25% this week. So, that's concerning that this area isn't trying to rally yet with that dollar. But again, it's also playing out seasonality wise. Gold tends to be weak from early May till early July, and that's still playing out. But I am seeing some interesting things there. We got to keep an eye on this area. And as far as today, a little pullback today on the 10 and 30 year, and a little move up in 20-year bonds. Next, item number 3 shows the economic news calendar. Again, we had Fed Chair Powell speaking today. That was that AI image I generated. Tomorrow, we have the initial jobless claims, natural gas inventories. And let's go and jump to the rest of the newsletter. So before we get into the newsletter, guys, major update for the KISS systems. So I took this image from the website. It should be pretty obvious here. So if you go to Systems section, click on KISS STS tables, it'll bring you to a table like you see here. Very clean. You can see we cleaned up the aesthetics of it a lot, matched the styling of the website more. You can see the buttons at the top for the various groups, such as the BPT basket, the Mega 8, Mega 10, S&P 500, ETFs, and favorites. Notice there's a favorites thing here. So if you look on the table, there's a star on the right-hand side. You'll be able to click on the star for individual stocks, and it will save it for your login, and it will go in your favorites. So you can, set 3, 5, 10 stocks, whatever you want. All right. And additionally, we're adding a feature where if there's a change, such as one of your favorites that you're following, let's say it hits its smart trailing stop, the website will automatically send you an email notification letting you know, versus me trying to do that. That is pretty awesome. Okay. Again, you have to be a subscriber for this to work. Okay. So, be aware, but pretty cool feature. You can see today AMD, this smart trailing stop was hit. Next, chart number 5. Here's the some of the KISS charts, that have been just leading this rally this year. So besides AMD, none of these have been hit yet. Tesla, Nvidia, Apple, Microsoft, though some of them, like Microsoft, getting a little close there. Still a little room. Tesla, big pullback today. It still has a little room to its smart trailing stop at 243. But hell of a run in these things, and not shocking to see a pullback here. We'll see if this ends up being a fourth wave for the market or if it turns into something deeper. Next, image number 6. Here's a easy click glance at the 4 major indexes with the KISS systems. The S&P at the top, smart trailing stop is 42.87. Qs, smart trailing stop at 348.60, and you can see the IWM and Dow at the bottom. Nice thing about the KISS systems, as you know, again, they're far from perfect. Nothing is perfect. No system is. But they do a good job. They give you an exit plan, and they will follow the trend. If the market goes into nutso mode and just goes higher and further than you think is possible, they will stay long with the insanity. But if there's a rug pull, something like that, you have your exit plans. Okay. Next, moving back to the general market, chart number 7. Here's the daily view of the 5 key major indexes. Again, nice little pullback this week. Essentially back to the 9 EMA on the S&P and NASDAQ. We'll see what happens here tomorrow, but we did so far get a slight reversion to mean pullback this week, which I expected. Russell here is consolidating, and let's move on. Chart 8, here's the daily, moving on to the S&P 500, which is our proxy. So here's the S&P daily. Again, I talked about this on the weekend. We were very stretched into this supply zone on the S&P, pulling back here the last 3 days. Right now we're at the 9 EMA here. Potential bounce point. Remember, in strong trends, the 9 EMA is support. We'll see if that holds or not. If we were to lose the 9 EMA on a closing basis, okay, that would set the stage for a move down to a 20-day moving average. And of course, there's going to be support around this previous 61.8 fib. Also matching the August highs. That's also a big support area. All right. Again, we show few different wave count perspectives here. You know, the super bullish view that would lead to new bull market highs would be in green. Other things where the market could still ultimately form some sort of lower high would be in red. Again, doesn't really matter. We're going to follow whatever happens. And that's the thing about technical analysis, guys. You project, you monitor, and you adjust. All right. So back in October, when the market put in a fifth wave low there, we were looking for a decent rally. Our target was at least that 61 fib. So that all played out. It doesn't really matter if the market goes to a new high or if the bear reasserts itself. You don't have to guess. You follow and adapt to whatever occurs. You have your set triggers and your discipline. Okay. But again, so far reversion to mean pullback this week as expected. That RSI 14 was overbought. That was also, it doesn't get overbought easily. You can see the last time it was overbought was in August of last year. Next. Chart 9, here's a zoomed in daily view. Again, you can see pull back to the 9 EMA so far. Now we'll see if we get a little bounce from that or not. Next. Chart 10, here's the daily KISS trend system, which I already showed you. Again, still quite, wiggle room here. The KISS system is giving to the S&P. It's at 42.87. The system went long back in March there. Next. Chart 11, here's the 4 time frames we like to follow with our indicators. So as I talked about on Monday, we had the DeMark 13. You had the DeMark 13 on the half day. Very stretched. So we're reverting back to the mean here. Not surprising. We're holding the ATRs on these time frames at the moment. Next. Chart 12, here's a half-day chart. Remember, I showed this on the weekend and on Monday's newsletter. We were at the upper portion of the channel. We had a black candle, so logical to expect a pullback from there, and that's what's occurring. Now, we didn't have any MACD divergence up there on most of the time frames. That's why we still are sort of favoring this as a wave 4. Next. Chart 13, here's a 2-hour view, same deal. We were at the upper channel. We've pulled back into this potential demand zone. Again, there was no MACD divergence up here, so still possibility there could be some sort of fourth wave pullback, and we'll see what happens the next couple days. Next. Chart 14, here's a 60-minute view. This has a potential wave count. Again, don't get too bogged down into that. We're just showing you some possibilities. So this would allow for still another move up in a wave 3 and 5, okay? With this being some sort of wave 4 pullback, which could complete here anytime, or it could complete, a few days from now. As you see, there's a little supply zone here. If it loses this, like I said, it could come down more into this range. So just be aware of that. The 60-minute really didn't have any divergence there either. But so again, guys, remember this fourth wave, it could end here. It could also pull back still quite a bit more and still be valid fourth wave. But if it is a fourth wave, then we're looking for another move up in a 5. Next. Chart 15, here's a 30-minute view. This channel, I showed this the other day. Steve showed it last night. We lost the channel. Yesterday we rallied up a little bit in the channel. Then, of course, sold off. And here, the bearish view would be a little head and shoulder. You see that there? And I didn't add a measurement here, but that would lead to lower prices, possibly that deeper fourth wave. And here's another key, guy, symmetry. So that pullback there in May, 65 points on the channel. You broke symmetry coming into yesterday, 81 points off the highs. So that led to a lower high. Symmetry playing out beautifully. Next, chart 16. Here's a 15-minute view. This expanded wedge, I meant to adjust this trend line here. I apologize, but at the moment you can count little 5 waves down here. 1, 2, 3, 4, 5. Again, unless this undercuts, then it's expanded, but something to monitor for tomorrow. Next. Chart 17, here's the triple Qs. Again, what can I say? They were going parabolic, and parabolic is unsustainable, and they're getting reversion to mean action. Again, if it loses the 9 EMA, the next target would be this 20-day moving average here. MACD line is also testing its signal line. Be aware of that. Next. Chart 18, here's the KISS trend system for the triple Qs, which I already showed above, but again, still wiggle room to that smart trailing stop at 348.60. And next. Chart 19, here's the 4 time frames we like to follow. Again, nice reversion to mean action. And we'll see what happens tomorrow. Next. Chart 20, here's a 2-hour review, pulling back nicely into that channel. Next. Chart 21, here's a 30-minute view. So this chart actually yesterday is what stood out to me. So we broke the channel yesterday morning. We rallied up, back tested it. That was a good short, and then of course we sold off today. Whenever you break a support, guys, and you rally up and back test the underside of the channel line, that's always a good short objective. Next. Chart 22 is a 15-minute view. Again, you can see this potential expanded coil. Apologize for not updating that. Next. Chart 23, IWM small caps. Again, they're just kind of basically chopping around here. They are below the 9 EMA slightly. Remember, it did achieve at least our minimum target of this demand of this supply zone up here. We were looking for IWM to rally at least to this area back in April and May when it was down here at this lower channel. Remains to be seen if we get a pullback to the 20-day moving average here or not. Finally, chart 24, here's a 60-minute chart, kind of a sideways action. Looks a bit weak here, though. I could see this busting down a little bit, maybe coming to these larger support areas. Next, chart 25, here's a 30-minute chart. Again, when we broke that trend line last week, that was a warning. And then so far, we're in kind of a little downtrend channel. So there you go on the indexes, guys. Quick check on futures here. So futures are basically flat so far this evening. Next, let's look at a few indicators. Chart 26, here's the VIX. So the VIX continues to move down. It's in this potential wedge. And by the way, remember, we've been talking about this for the last couple weeks. There was a really large amount of put contracts on the VIX, and that's what's helped push the VIX down. Okay, those expire today. Now we'll see if that allows the VIX to have some little bounce or not. Next, chart 27. Here's another chart of the VIX of the Bollinger Bands. As you know, the VIX has been going down when the market was going up. The VIX is now spiked to another uncorrelation, so be aware of that. Next, chart 28. Here's a 2-hour review of the VIX. On a little channel here, we're near the lower portion of the channel. We'll see if the VIX finds some support there or not. Next, chart 29. Here's the NYMO McClellan oscillator. Remember, it's had this divergence setting up. That's starting to play out now, as you can see. You can see the past examples of that divergence. Next, moving to bonds, chart 30, high yield corporate. They've been weak here, and they started getting weak last week. They weren't keeping up with the market. Remember, the market tends to follow high yield corporate. Next, chart 31, here's the 60-minute view. This wedge is playing out. In fact, it broke symmetry here. So, next, chart 32, TLT 20-year bonds. As you know, they broke out of that little wedge last week in the larger channel. Held that, trying to bounce here. Next, chart 33, here's the yield curve. The yield curve fell again today. This is not getting any better, guys. It is not it continues to get worse and worse, more inverted and inverted all the time. Does that look healthy to you? I know everyone thinks everything is magically fixed now. The AI revolution, has caused a new bull market, and all these stocks like Apple and Nvidia are running like crazy. Everything's saved. But does this look like the economy is doing well? Not really. Anyway, just keep an eye on it. Next. Chart 34, moving on to the sectors. We're going to look at a few of the sectors here tonight. Most of them pulled back. A majority of them pulled back today and for the week. Let's take a look at some individuals. Chart 35, XLK Technology. Again, that's been the star this year. It actually briefly took out its 2021 high. Initially stalled in the supply zone. It too now has reverted to the mean. It closed below its 9 EMA today. That sets the stage for further pullback down to its 20-day. Next, chart 36, XLC Communications. That contains some of the FANG names as well. It's still uptrending pretty strongly here. It is below its 9 EMA. So, lower channel line is your bigger support. Next, chart 37, Semiconductors. They're pulling back too. Nicely. Looks like the 20-day moving average is a short-term target. Next, chart 38, IYT Transports. We identified this, that it looked good a couple weeks ago. It's had a nice move up. It's pulled back. It's now trying to maybe bounce off the 9 EMA flag here. And as far as the transports, we gave some long ideas there. Let's take a look at those. Chart 39, here's American Airlines. This was a long idea of mine a couple weeks ago with the resistance at 15 bucks. It rallied nicely into my supply zone. Next, chart 40, Southwest Airlines was another one we gave. This was your trigger right here. Super move this one had. Next, chart 41, XLI Industrials. This had a strong pop out of this channel coil pattern all the way up to resistance where it pulled back, bounced off its 9 EMA today. Next, chart 42, Clorox. It is in the industrials, has this wedge Steve's been talking about a little bit. Next, chart 43, XLE Energy. It's been weak, but it's bounced today. We'll see if it can hold. It bounced off this little support. Next, chart 44, XOP, another energy stock, one to watch if the area does improve. Next, chart 45, APA, another energy name to monitor if the energy space improves. All right, let's move on to commodities. Chart 46, DBC, that's the commodity index, up 0.5% this week. Big rally last week right off that 200-week moving average. The weekly chart has a potential falling wedge. If this breaks out of the wedge strongly, that is not going to do the Fed any favors on fighting inflation. The Fed's got to be aware of this. Next, chart 47, here's the daily. Again, I talked about this pullback down to the lower wedge as a low risk long. Nice rally from there. It's still within the larger wedge, but that was a good long entry. Next, chart 48, crude oil. It held on to that support, trying to move up again. It's still overall pretty lethargic, pretty weak. It's below its 200-day moving average. Next, chart 49, natural gas. Big pullback yesterday, bouncing back today. Again, overall, long-term, it's forming a long-term base here. Next, chart 50, copper. It regained its 200-day moving average last week. It's holding up. Again, you can see how it rallied off that lower trend line back in May. Next, chart 51, DBA Agriculture ETF. Big rally the last few weeks. It's up again. That bull flag has been playing out. The agriculture area has had a really strong move lately. Not something you want to see. You go to the grocery store. Next, chart 52, here's the daily. Again, I put a symmetry target here yesterday. It's now exceeded that. So hell of a move out of here. Next, chart 53, wheat, a subcomponent of agriculture. Look at this move and good volume. Next, chart 54, sugar, also been moving. Now, this new high does have some MACD divergence. Be aware of that. Moving on, Chart 55, Bitcoin, big breakout from this falling wedge pattern the last few days. Nice power move out of there. Next. Chart 56, Bito was a way to play it. This is the Bitcoin leveraged ETF. Look at that nice move. Look at the volume. Again, was a really nice play. And, especially even if you bought it yesterday, really big pop today. Next. Chart 57, Mara, we've been showing this for a while. Finally busted out of its range yesterday. Big old gap up today. Hopefully you held your shares coming into the day. Next. Chart 58, Riot, here's another one. Nice move up, testing this little downtrend line of the wedge. Next. Chart 59, Hut, another one of these Bitcoin type stocks. Monster breakout recently from resistance. Finally. Chart 60, MSTR, another one popping. This one's an expensive one. Moving on. Chart 61, US dollar. As you know, last week lost that 50-day moving average there, back tested it, and down again. This does not look good, guys. Now, gold is not rallying yet on this, so that is something to be aware of, but this does not look pretty. Next. Chart 62, gold. Now, gold, this pattern does not look good, but it is still holding on to here for now. If it were to break down from here, I think, your 200-day moving average would be a great support. And again, guys, gold seasonality is weak from May to early July, so that has been playing out. The wedge pattern we showed back in April, May played out. Next, chart 63, silver. You can see how that rally a couple weeks ago stalled right at the 50-day moving average, coming down to near its 200-day moving average again. Next, chart 64, GDX. Losing this little trend line here today. It's still in a potential demand zone. But again, onus is on the bulls here, guys, and that dollar pulling back, the stocks are still not finding any bids. We do have a doji here. This could be, I would still watch this tomorrow. If price regains the high of that doji, you could attempt a long with a stop at the low there. Another trigger to watch is this trend line on the RSI 14 over time. Next. Chart 65, GDXJ. Now, GDXJ is interesting here. So again, you have a little doji today off the 200-day moving average. It would have been nice if it closed more positive, but something to watch tomorrow. GDXJ has a different count than GDX. You have potential 5 waves here. But again, the 5th wave can extend, so that's not a buy signal in itself, just like divergence isn't a buy or sell signal, but it is something we're watching. You can watch these trend lines in the ratio and the RSI. Next. Chart 66, Dust. Talked about that on the weekend. That was the inverse ETF to play a pullback in this area, and that is so far given a trade out of this pennant. Next. Chart 67, SIL. Here's another ETF. That's the Silver Miners ETF. And just like GDXJ, you have 5 waves. Now you're into a demand zone here. Again, hasn't reversed here. I need to see a trigger. I don't go long just because there's 5 waves here. I need to see a reversal trigger of some sort. We do have MACD divergence, but it is something I'll watch. Next. Looking at some of the larger names in this space, chart 68, RGLD, nice correction from the May highs, 147.80 all the way down to 112 now. There's a little demand zone here, and there's another demand zone below from the December lows if it wants to hit that. Again, we'll be watching for a trigger. Next, chart 69, FNV, another one that's come down pretty nicely. Back to its 200-day moving average now. So we'll see what this area does, guys. It does concern me a little bit that it's not trying to rally with that pullback in the dollar. But again, precious metals don't always move lockstep with the dollar. And seasonality-wise, it still tends to be weak now. So, it is what it is. Next, following up on trade ideas, chart 70, Sound. This is one of those AI plays. Huge breakout yesterday. Hope you took some profits yesterday. Give some back today. Next, chart 671, BBAI, another one of these. Pulling back here today. Next, Jarbor 72, PayPal, little pullback here. Really nice move from that breakout last week. Next. Jarbor 73, MOS. One of our astute members, actually a new subscriber, posted this today in the morning asking me about it. The pattern does look decent here. And, again, depending on where your stop goes, that's going to depend on, as I told the nice individual, depends on your time frame, why you bought it. Are you a swing trader, are you a day trader, are you a long-term position trader, But, this pattern looks good for now. One potential stop would be just below that 34.24 area. And if it breaks out of here, initial target would be that 50-day moving average. Next. Jarbor 74, KOPN. Here's a new one. It's kind of coiling. We'll see which way it breaks. Trade the direction of the break. Next. Jarbor 75, CP, Canadian Pacific Railway. You got a resistance right here at the 79.60 area. Nice pickup in volume today. Maybe one to watch for a quick breakout. Next. Jarbor 76, MDXG. Probably the best looking setup I could find on the long side tonight. Nice flag, pennant type pattern, good volume today. Next. Jarbor 77, CLSK, another potential long. Wild action here, good volume, but again, sorry, but my mouse died. So you can see quite a bit of range. You can see today it tested the upper portion of that wedge and pulled back. One to watch. Again, I added some longs here, but it was tough to find any good long setups. So that's why I think the market's still vulnerable here, guys. And that'll do it. All right, let's see what happens tomorrow, folks. And have a good evening. Take care.